It's official. NDTV Profit's newsbreak is confirmed. A major shake-up in India's banking space. We have Dubai's state-owned Emirates NBD will buy a 60% stake in RBL Bank for 26,853 crore rupees, marking India's biggest ever FDI in the banking sector. This $3 billion deal values RBL at nearly 45,000 crore rupees and positions Emirates NBD as the new promoter. Now, once the acquisition concludes, RBL Bank will merge with Emirates NBD India, the Dubai lender's wholly owned subsidiary in India. We are now joined by Vishwanath Nair, who broke the story earlier. But before we go to Vishwanath as well, Vishy, this is a mega deal that has been announced between Emirates NBD and RBL Bank that is actually tagged as the largest ever equity infusion in an Indian private bank. What are you picking up? And I don't think so this was something that anyone probably even envisioned would come in on a weekend, and that also a Diwali weekend. An absolute dhamaka in the banking space.
Hiral, we were prepared for the announcement to come on the evening of the 18th, which it did. But the fact that the press conference is happening on a Sunday is a bit surprising. But we're all waiting actually for the management to come in and give their viewpoint about the deal and how this transaction will move forward and how that will help RBL Bank. Now, let's get you through some basics of the deal. Basically, this is a $3 billion deal, as you mentioned earlier, 60% stake in RBL Bank. This will ensure that RBL Bank becomes a subsidiary, the India subsidiary of Emirates NBD, which is the second largest bank from Dubai. It's also owned by the Dubai government, majority owned by the Dubai government. Largest ever FDI in banking. It's also the largest ever equity fundraised by a domestic private bank. The last one was, of course, Yes Bank back in 2020 when they raised about 15,000 odd crore. This is also a multi-stage transaction. First of all, the RBL Bank will have to expand its authorized share capital base. Then from there, 51% stake will be sold to Emirates NBD. After that, that will trigger an open offer, because of which more stake will come into play. RBL Bank will further issue more equity stake to Emirates NBD as part of, after the open offer is completed. So at the end of this entire transaction, after spending roughly $3 billion, Emirates NBD will end up with a 60% stake in the bank. Now, of course, this will push up RBL Bank's net worth from close to about 15,000 crore now to 42,000 crores, 3-time increase on the net worth side. It will also likely improve the credit rating, bring down the cost of funds. It will allow the bank to have an accelerated sort of branch network, because this is all primary money that is coming into the bank. So large amounts of funds will come into RBL Bank. It will give them a boost on the capital adequacy, and that will help them expand their businesses further. Right now, RBL is a domestic retail-focused lender. This opens up the door for more international businesses. Back to you, Hiral.
Okay. So, this is going to be interesting. Vishy, stay with us. We have Ashvin Parekh, MD at Ashvin Parekh Advisory Services, also joining in. Ashvin, welcome to the show and a happy Diwali to you and everyone in the family. My first question coming to you is, one of the largest deals in terms of size, in terms of stake, your initial comments?
Well, I mean, the size of the deal has to do with the size of the bank, quite clearly. So if we look at the earlier acquisition, and of course the size of the stake. So if you look at the earlier acquisitions, we find that, let's say, Lakshmi Vilas, was picked up. Well, Lakshmi Vilas is a small bank, but by DBS, with a small investor of roughly about 2,500 crores. Then we saw, of course, the SMBC, which was once again a 24% stake, and spending about 13,000 crores of, putting in FDI of that amount into Yes Bank. So the two things are there. One is the bank is large. The deal is certainly large, because you're talking of 60% of RBL eventually. So the deal size is certainly. But what is very encouraging, Hiral, is to observe that RBI is now becoming a little more comfortable with having foreign banks acquiring more and more stake in the Indian banking companies, which is a very interesting one. And we are not only confining ourselves to the old private sector banking companies, we are also talking about the new ones. Like, for example, Yes Bank happened much after, the initial opening up was 1992, but thereafter Yes Bank happened. So, and there also, once again, RBI was comfortable. So I would certainly say that this is in some form or the other forming a trend, of RBI's comfort level in having foreign capital into Indian banking, basically. Direct investment, not through DFI and not through the market acquisitions, but this is like participating in governance, participating in large part of governance. 60% is, I mean, Emirates NBD will virtually get the controlling stake in this bank, basically.
Mr. Parekh, I had a quick question for you. So basically, you're talking about these foreign banks entering the space and starting to own private sector lenders in India. I wanted to get a sense about the whole conversation about voting rights versus shareholding in a bank, right? Like, so the RBI has to cap the voting rights at 26% because that is part of the Banking Regulation Act. But is this the right time then to look at separating economic interests versus strategic control?
Well, so this is going to be an interesting sort of question now as we go forward, because the exception has been made. I mean, as we said, the investment in Yes Bank was 24.22%, so which was less than 26%. Here we are talking about eventually 60%. So certainly RBI may have to really come out with a new framework. I mean, and it has to do something to do with even Companies Act provisions, basically. You can't disturb that. So therefore, the banking regulation will have to acknowledge that foreign banks will have more than 26%, and they will have to be given some voting right kind of a, because if Emirates Bank, Emirates NBD Bank has to control the bank, has to participate in the governance of the bank, then in that case, voting rights will become an important item, basically. So certainly, Vishwanath, your point is absolutely valid. Going forward, we may see some clarification in this regard as well.
I think there's also the question of the RBI not being okay with, say, a foreign player coming and taking control of an Indian lender, where the bank is Indian, its customers are Indian, but the ownership is abroad, right? So strategic decision making, all of this goes outside of India, and it becomes a little challenging for the Reserve Bank to control. How does that play into this entire deal and talk of foreign banks coming in?
No, so this is absolutely one of the major questions. You see, if you look at all major jurisdictions, particularly the developing countries, I mean, including even the developed ones, I mean, US and European, the regulations do not allow foreign entities to really take complete control of a bank where deposits are taken, where lending happens. So because there are deposit holders at stake, there are Indian borrowers at stake in this particular case. So I would certainly say that it's a little tricky question. But then we'll have to look at what is the foreign bank aspiring. If the foreign entity, I mean, in this particular case, for example, Emirates NBD, is aspiring for not necessarily control, but aspiring really to bring in good practices, some of the, I mean, and good business, more importantly, because between the Gulf and India, you do have remittances, you have large amount of trade businesses, foreign trade also. So, I mean, it all depends on what is Emirates NBD going to bring to RBL, is also has something to do with the controlling part, and the governance part also.
Ashwin, the other aspect I want to talk to you about is the foreign ownership cap. Now, how will the acquirer actually manage its stake to go ahead and ensure compliance when you talk about the FI limit or cap and the minimum public shareholding requirements after the completion of the preferential issue and the open offer?
Yeah, so I suppose the only thing at the moment for the regulator to play around would be the voting rights part, sort of. So what they could perhaps do is make an exception in regard, I mean, voting rights can still be kept at 26, and make an exception in regard the foreign banks holding. I mean, dispensations can be offered on a case-to-case basis by the regulator, but we'll have to see how exactly. I mean, something that will get. I mean, we'll get a clarification from the RBI in the next coming few days in terms of how exactly are they approving this structure, basically the deal of and the structure of this particular deal, basically.
Mr. Parekh, a quick question about what RBL stands to gain from this. Yeah, we've spoken a lot about the foreign buyer, we've spoken about the regulator, but the domestic lender, when they're allowing this large backer come into the picture, there is no prior relationship really between RBL Bank and Emirates NBD that we know of at least. What does it stand to gain from this transaction?
Well, there is a lot of listen. There's a lot of synergies and positive things about this. Let me articulate my thoughts. Let's say if you look at Ratnakar Bank, which was traditionally RBL, I mean before it became the name was changed to RBL. When Vishwavir Ahuja got the approval from the RBI to acquire controlling stake, and he managed it quite well. He brought the bank up to a certain point. I suppose the last part of his stint, the stint over there, came under a bit of pressure because I suppose the balance sheet became a little sort of, I would say lopsided towards or skewed, towards assets, long assets, which actually, I mean, had stopped repaying. So there was a bit of question on that. I suppose from there on, after Vishwavir Ahuja's sort of, exit from the bank, we saw that the bank was actually struggling to find its feet. I mean, in the sense, it was doing okay, it was doing fine, but I suppose there was no directional kind of clarity. I suppose with Emirates NBD coming in, and more than Emirates NBD, a huge amount of capital coming into the bank can now aspire to take a proper shape, the shape that they and Emirates NBD want to take, in terms of clear idea about whether they would like to participate more in infrastructure funding, which is what Emirates NBD has been doing in India. I mean, aside of the branching network, the branch network that they have, they've also been investing through infrastructure deals in India. So I suppose a lot will depend on Emirates NBD and RBL working together in terms of new business approach. One thing is certainly sure, the capital strength will be huge. So with so much of capital flowing into the bank's balance sheet, the bank's ability really to lend and also to grow would certainly be there. I mean, it has about 1,800 odd branches. There are some 570 odd business correspondent branches, sorry, 570 odd branches and other business correspondent branches. But it will certainly be able to grow its network and its balance sheet size also, in fact. So I suppose the bank certainly gains, and mainly because so much of capital is flowing in, Vishwanath.
Mr. Parekh, one question and maybe a comment about Mr. Subramania Kumar as well. He's come from Indian Overseas Bank, then moved to DHFL for the resolution there, then came into RBL Bank because, of course, there was a leadership vacuum that was created. And then he's run this bank for the last 3 years, and now you're doing one of the largest deals in the entire sector. A little bit about his leadership as well.
No, so see, I mean, in the last 3 years, I did provide, good leadership, I must admit, but it was more like a short-term kind of let's say, a solution that RBI and the bank had arrived at, the board of the bank and the RBI, the Reserve Bank of India had arrived at. I mean, they had to look for a long-term solution, quite honestly. Now, what may happen is with Emirates coming in, they could look for a good, a banker, a little youngish banker, and really give the bank the kind of direction that Emirates NBD wants to give it.
All right, sir. I just wanted to also get a view about this entire conversation about the banking system getting more capital, right? More access to a wider pool of capital, and if this becomes a sort of a direction in which the RBI takes things, which is to allow large foreign investors to come in and pick up majority stake in Indian banks. Does this open up a lot of capital opportunities for domestic banks? And then does that mean that you could see maybe faster growth within the domestic system?
So ever since, the RBI decided to open up the banking system in 1992, and I mean, then there has been a debate, between the stakeholders, the different kind of shareholders who want to really invest in Indian banking. But then the RBI also has been taking a view that business entities or industry houses will not be given the approval to really run banking or to own banking companies in India. And to that extent, capital today, if you look at the way the capital is being mobilized, it's all through retail investors, basically. Now, this is where the risk lies. If you look at the composition of total capital in Indian banking, I mean, and then if you take out the government sort of, equity in the public sector banks, then you're left with banks like HDFC, ICI who really been able to get a lot of foreign investors. But then, of course, there have been control in the kind of percentage of shareholding that these foreign entities can own. I mean, and so, but they've been able to do that. So one thing is becoming very clear, Vishwanath, that if credit has to grow, if the disintermediation in the banking has to be arrested, we can see very clearly in the last monetary policy, the governor has admitted that there is an element of disintermediation because the deposits are flowing into the markets these days. That is the household savings is flowing into the markets. It's not going to the banking system as much as it used to be earlier, and gradually it's only reducing. So we need large capital now into Indian banking to grow credit, particularly in infrastructure and other long-term asset areas. From as far as the working capital and other requirements are concerned, corporates with good ranking and all are really being able to get that kind of fund from the market itself. They've been actually mobilizing that. So we are in a state of like crossroads where the composition of the balance sheet will change, certainly of the banking system, and we're certainly going to look at more capital which are going to come from perhaps foreign entities and foreign banks. So I think that door is being opened up. Corporate and industrial houses investing in banking, to my mind, is still a no-no, and perhaps rightly so as well. But this is a good door for the regulator to open up to let capital flow into the banking system.
Ashwin, we've spoken about RBL Bank as well, what it means for them. We've spoken about the incoming promoter now. What about investors and shareholders? First, what is the kind of value creation will, a deal like this will do for the existing minority shareholders? And two, I'm sure there would be a mechanism that would be in place as well for the eventual exit or even for a sale down of Emirates NBD's stake if and when the need arises. So any regulatory guidelines that are already on mind on that aspect and the kind of impact it could have on shareholders' value creation?
Yeah. So see, as far as the shareholders are concerned, I mean, basically, everything will really depend on the value that will be created now after this deal. And to my mind, that value creation can only grow and become positive with so much of capital flowing into the bank's balance sheet. So to my mind, the shareholders, existing shareholders, certainly are going to really benefit out of this. It doesn't really depend on how much shares I own. I mean, whether I'm like owning a 0.5% of the bank or 0.005% or whatever, as long as the economic value or the market value of the bank grows, every share, I mean, each and every shareholder benefits out of it. I mean, even Emirates NBD also, if there is a value creation in the next 3 to 4 years, then it is their call and the regulators call, shareholders call to see when they would like to exit or whether they would like to dilute their equity. And the dilution also can come in by way of more capital, I suppose. There's no need for Emirates NBD to exit in that way, sort of. So that's something that I would say would be a direction.
Changes with this kind of a significant capital raise that is happening on the dividend policy in the short to medium term? Do you think of anything of that sort will happen?
Well, actually, what will happen is dividend is a function of the performance of the bank, quite clearly, and also the amount of capital that the shareholders want to sort of plow back into the balance sheet and the amount of it they want to distribute. More than the dividends, Hiral, I would certainly say that it's the value creation. It's the I mean the value of the equity. That if that grows, then the shareholders would be very happy. I mean.
Okay. Apart from this, Ashwin, all of us are waiting for the presser to start now. What are the key aspects that you think we should be looking out for from the management now?
Yeah, so I suppose from the deal, what is important is I mean, when the detail will be available, I mean, it may not entirely be available today. I mean, at the press meet, we'll have to go through, a lot of reports and RBI's sort of also report on this subject. But I suppose the most critical part is going to be governance, quite honestly. I mean, the number of board positions Emirate banks will have, I mean, NBD will have, uh, who are the other who are the other board members, what is the governance framework that will be now allowed to be created? Those are the questions. I mean, controls on different committees, presence on different committees. Most importantly, the business strategy part. Sort of, if Emirates NBD get a free hand to really give the bank a direction, then that would be something which is good for everybody, I suppose.
Ashwin, the other aspect that Vishy and all of us have been discussing is that with this deal and the recent deals that have happened in the private banking space, from a Yes Bank, which actually went ahead and sold that 25% stake to SMBC, you had IDFC First, which also brought in a PE investor. Does this actually come in and pose a change in the heart of the RBI now?
Oh, it does. It certainly here. I mean, it's completely. See, if you look at the narrative that, let's say, the monetary policy and particularly the governor, I mean, the previous governor and the present one as well. If you look at the narratives, there is a clear admission that the credit flow from the banking system is gradually is decreasing. Deposit taking is decreasing. Disintermediation is in its place, in which case capital, more and more capital for the credit needs. I mean, if India has to continue growing at 6.5, 7%, I mean, it's aspiring for even more for that matter. If it has to grow at that level, then the balance sheet of banks will have to grow at a very good rate, because deposit money, the CASA particularly, and the cheap money or the low cost deposit which are flowing into the banking system are days of the past now, basically. So that capital, I mean, the household saving capital is all moving to the market today. So in that context, with the change in the trend, the composition of the shareholding also will have to change here.
Okay, Ashwin, stay with us. Because Vishy tracks this sector pretty closely, I think what I want to ask him is how is he viewing the pricing of these various transactions? Because many view this as an expensive effort for a FI or a foreign bank to enter Indian lands. So how are you looking at the valuation perspective, Vishy?
Hiral, at 280 rupees a share, it's at a mild discount to where the stock closed on Friday, a little over 299 rupees, right? Close to 300 rupees. So to that effect, currently this deal would value RBL Bank at about 1 time its book value, which the people I've spoken to who are part of this deal, they seem to believe that this is the appropriate value for an RBL bank. Look at what has happened in the last 3 years. So you have identified whatever problems were there in the microfinance, the credit card portfolio. The management has gone out of its way to go and provide for it. Now, finally, you having a stable set of numbers that are coming out of the bank. Even the results that came last evening, you could see that the gross NPA ratios are actually coming down. So there is an improvement on the financials. And this franchise itself, the benefit for Emirates NBD largely is the fact that even though its voting rights are limited to 26%, this is a 100% publicly held bank. There is no identifiable promoter at this stage. So the expectation that somebody will group up or a large shareholder will come and oppose anything that Emirates NBD wants to do, that fear goes away. So for them, it makes a lot of sense to spend that account money. And I'm sorry, but people from the Emirates are known to spend big.
I know. I mean, people from Emirates are known to spend in a big way. But does this actually set a benchmark, Ashwin, when it comes to potential deals that could be the offering, number one? And two, do you think a strategic investment is the best way for foreign investors to actually look at domestic banks then?
Yeah, so let's look at these two questions separately. One is when it comes to valuation, I've always believed that that's a shareholders play. I mean, between the shareholders, they decide. And in many cases, in most cases, the valuation is a function of potential that the buyer looks at. I mean, if he finds that there is a good potential that he may be able to add a lot of more value, then of course he will be prepared to pay a certain price. So it's a function of that. As far as the strategic capital is concerned, I really take your point here. It's a very valid observation. I mean, SMBC, for example, or I mean, in case of Yes Bank, now we know Yes Bank needs direction. It needs basically, I mean, a strategic partner who can give that. I mean, can financial investors provide that? There's a question mark. I mean, they may talk about the fact that they can bring in a lot of good governance, this, that. But when it comes to risk management practices in banking, technology in banking, I mean, these are subjects which, demand only a strategic partner to come in and look at the bank. So I suppose, I mean, I can see from the screen that the management has come in, and I think they are starting soon going to start the
Soon.
press
They will, we
conference.
will continue our discussion till the time we see the management come and speak, because it's
Yeah,
very interesting to see how this entire deal pans out. But, as we're
yeah.
talking about the best way for a foreign investor, whether to come in and look at domestic banks, how do you look at it, Ashwin?
Yeah, so I'll tell you time and again, we've seen, I mean, if you look at the entire effort that the government has made on IDBI Bank, for example, I mean, when they realized that the capital that they needed, I mean, the money that needs to be poured into IDBI Bank was not available in Indian banking. So they were looking at, let's say, I mean, we had DFS secretaries making foreign trips, meeting with, possible banking companies who would be interested in investing in IDBI Bank. So we've seen that. I mean, so in some form or the other, the direction of having strategic partnerships, is already been set. If you asked me, sort of.
And the other angle that I want to talk to you about is, we spoke about the kind of benefits that India is going to see from the large foreign capital that comes in, specifically when it comes to banks. Do you think at any given point in time, decision making could suffer?
Well, not really. See, the only risk, if I see, I think not the strategic risk or the decision-making risk. I mean, there I believe that the foreign banks are known for delegating, sort of, empowering the employees. So decision-making is not one of my worries. I suppose the real risk will flow from the financial performance of these entities in their own respective jurisdictions. I mean, we've seen that, for example, in the past, that I mean, whether it was like I mean, the Lloyd's Bank in the UK, or you see, if the banks in their own home territories, they suffer, I mean, from the financial performance, then the amount of attention they pay to their subsidiary, sort of, companies in other jurisdictions reduces. And then they are sometimes forced also to really dilute their equity or to sell away their equity. So, and this happens, I mean, this happened I mean, after the global financial crisis, it really sort of increased that pace of, the balance sheet of bank in the home country becoming weak, and then looking at subsidiary kind of presence in other jurisdictions, and looking that as, I mean, as a leverage to fund their own balance sheet. So those are the risks which are valid, I mean, whether it is SMBC, Emirates, or whether it is DBS, but those risks are valid. I mean, I would certainly say.
And the entire deal structure that was really well explained so far, and I'm sure Ashwin Parekh will also agree to it, who was with us, who was hearing the entire conversation. But with Ashwin, I mean, we'll get Vikram, Raghani, partner at JSA Advocates and Solicitors, also joining in. But first up, let me go to Ashwin and ask him, what his thoughts are now, listening to the management actually come out and give us the entire deal structure, number one, and two, the nitty-gritties that we've heard so far. Ashwin, any additional comments that you would have versus what we already discussed before the presser?
Yeah, so one or two additional comments. One, of course, is that there is a clear mention that the Indian operations of Emirates NBD will be merged into this new entity, into the RBL. So, which comes in as an interesting sort of point to look at. I mean, the existing operations of NBD as branch network of 3 branches is a small one, certainly, but then of course one has to understand, I mean, the employee part of it and the hierarchical part of it, because they already have, I mean, the country chief at this point in time, and they have their own team of professionals. So, I mean, some amount of clarity will evolve. But what is important was that it's going to be merged into the RPL. So that's first thing. Now, when it is merged and all, the price at which it is going to get merged, I mean, what kind of balance sheet price that RBL will have to pay for that merger. I mean, those questions will have to be answered as we see, the scheme getting rolled out as we go. But this sounds interesting. So that's my first comment. And the second comment was there was a clear admission, I mean, on the part of RBL that I think one of the major challenges that they have been having, and this is something the CEO and the MD did talk about it at length, was that they have actually done a fair bit of unsecured lending and microfinance also, and they seem to have sort of picked up problems over there. So, I mean, there are those corrections happening now under the new leadership, where they're putting more emphasis on secured lending, retail secured lending, and there's more emphasis on also at the same time the quality of the loan book. So, those are the in some form the admission on the part of leadership to say that that's where the focus of the new entity will be. So those are the two takes, in addition to what we've discussed so far here, are the two additional points that I thought they came to my mind. So I thought I'll share them with you.
Got it. Thanks for that, Ashwin. Stay with us. Let's get in Vikram Raghani, partner at JSA Associates and Solicitors as well. Vikram, welcome to the show. Always a pleasure to speak to you. I mean, I'm sure you've heard the entire press conference as well and the nitty-gritties that have come out from this. My question coming to you is now the overall foreign investment limit right now in private banks is around 74%. Given that Emirates NBD actually plans to acquire up to 60% via preferential allotment and then potentially more through the open offer, how will the final shareholding or the final foreign shareholding, if I may put it in that context, be managed to stay within the 74% aggregate cap, or will it be scaled down if the open offer is fully subscribed? I think we've lost the phoner with Vikram. We'll go back to him. Ashwin, I'll come back to you, in the meantime. Now, one point, Ashwin, what I found weird over here is that they're doing the open offer first over here, which is slightly a bit weird. Anything that you would want to say on that?
No, well, actually, it's not weird. To be very honest, it's very logical. And let me explain why. Because see, they have to chalk out the entire deal within two frameworks. One is there is a 74% framework. Then there is a SEBI framework. SEBI framework very clearly talks about the fact that the retail investment, the retail shareholders should continue to be at 25%. So in the backdrop of that, the IPO, that is the open offer is the first thing that is essential. It will tell the bank and both the parties the extent to which the preferential allotment can be carried out, keeping in mind thereafter those two regulations. They cannot breach 74%, nor can they really breach the SEBI regulations. So they will have to either scale down or go ahead with the proposed plan as they have envisaged. If the envisaged open offer brings in only the kind of response that they may have perhaps planned or presumed or something sort of, So it will have to be suitably either scaled down, and the rest of the numbers will start looking differently in terms of how much of preferential equity. But one thing is pretty certain, however, that as far as Emirates NBD is concerned, overall, with open offer purchase, acquisition, plus with preferential allotment, they are looking at a 60% presence in this balance sheet. I mean, that comes out as a clear point, basically,
Ashwin, thanks. That's interesting, explanation that you've given. Vikram is back with us. Vikram, how are you looking at this? Because we're talking about a 60% stake, and this is potentially more through the open offer. How will the final foreign shareholding be managed to stay within that 74% aggregate cap? Or will it be scaled down if the open offer is fully subscribed?
Look, I don't want to comment on any specific bank situation, whether it's this recently announced deal or otherwise. But yes, obviously the foreign ownership has to remain within the 74% cap. I think what is a more bigger, better takeaway from this is that RBI is obviously now open to a larger sort of consolidation in private sector banks, right? Especially when it comes to foreign institutions with a large sort of, who are global leaders in the sector and who have an established track record of running successful financial institutions. I mean, until now, if you see, RBI would allow ownership as large as some of these recent examples, only in cases where there was some kind of a financial stress. But obviously now the perspective seems to be becoming more optimistic and positive to allow large foreign capital into banks to allow them to grow and improve the size and scale of their operations. So that's how I would see it. I mean, the regulations will lay out in their course, and parties will have to align within the current framework.
Vikram, I was taking the same question with Ashvin earlier as well, and very rightly put, does this deal, the recent transactions in private banks, when you talk about a Yes Bank selling 25%, IDFC First also bringing in PE investors, pose a change in the heart for the central banker?
Yeah, absolutely. I think they're now more open to sort of larger consolidated holdings in these banks, and they see the sort of benefit and positives of allowing Indian banks to leverage from the experience and scale of operations of some of these global investors, right? Whether they are strategics or financial. So certainly a shift in policy for the positive for sure.
Okay. And is this strategic way the best way for foreign investors to look at domestic banks, number one? And in any case, do you see hindrances coming in? Because the management has now indicated that they will be having an EGM, if I'm not mistaken, on the 11th of November. So in terms of processes, etc., what should investors watch out for?
I don't think there would be any hindrances. I think the one issue that has bothered all strategic investors in banks is the voting cap of the RBI. The RBI still has a 26% voting cap. But other than that, in terms of some of these investments coming through, I don't expect any hindrances. In fact, the government and the regulators have been extremely supportive. Approvals have been coming through in a very, very efficient manner. Now, whether it's through the ease of business policies or general sort of willingness of the government to allow participation of this size and scale in Indian banks. So I don't think investors should be wary of any hindrances in the process. As I think the overall climate is extremely enabling and encouraging for these type of investments.
Vikram, my last question from a regulatory and legal consideration perspective to you is, anything that you would be watching out for when you talk about regulatory approvals for the transaction, challenges maybe not on the RBI side or on the back of the FDI related clearances, and compliances that come in when you talk about FDI policy in banking? Anything one should watch out for?
Again, not getting into any specific situation, I don't think there is any sort of thing to watch out for from a roadblock perspective. Right? Like I said, overall, it's a very enabling environment from a regulatory standpoint, and I think it's just positive for everyone, whether it's the retail shareholders or the banks or the strategic investors who are coming in.
Thanks, Vikram, for that. Ashvin, my last question coming to you. Another aspect that I picked up over here is that wealth management and corporate banking businesses, these are the ones that will be developed on the back of this kind of a deal. Is this actually good for a bank like RBL, according to you, who does not have much history with these segments?
Well, it appears to me, Hiral, that wealth management is becoming the buzzword at this point in time with the banking system. People are talking about wealth management and getting into wealth management. Getting into wealth management, of course, requires a lot of skills, a lot of, different kind of orientation for a bank and a customer base, which is sort of, so RBL will have to really examine all of that. But then, of course, Hiral, if I have to really look at this transaction, and based on our discussions so far, I'm clearly getting a sense that this is becoming a good prelude to IDBI Bank transaction, quite honestly. We could be looking at sort of an announcement from, we got from the DFS secretary about a few months ago, suggesting that one of the US bankers is seriously looking at, IDBI Bank and acquiring a controlling stake or a good amount of equity of IDBI Bank. This certainly becomes a prelude to my mind, because the regulator is open to this. And if they've done 3 or 4 transactions in the private sector banking, I'm sure, this can become a direction. Who knows? Eventually, it could even open up foreign investments in public sector banking also. So, I mean, we have to wait. It's a matter of time, but I think we will have to wait.
Okay, we will have to wait, but this is going to be interesting. Thank you, Vikram. Thank you, Ashvin, so much for joining us on the show and sharing your views, because here we are talking about the entire deal which is really worked out in favor of RBL Bank. That's what it seems like, where we are looking at Emirates NBD, who will be investing nearly $3 billion to buy out almost 60% stake. This is the largest in FDI banking history as well, and the largest fundraise coming in by the bank overall. Secondly, you have Emirates NBD that will be classified as the promoter of RBL Bank, and RBL Bank actually will become a direct subsidiary of Dubai's second largest bank. Just to be noted, this is happening between Emirates NBD India and RBL Bank. This is going to be the biggest instance of confidence when you talk about the capital that is being infused in the Indian banking system. What is going to be the key how shareholders respond and the kind of stock price reaction that we will see on a Monday morning on a RBL Bank. But that's all that we have, viewers. Thanks for watching. Lots more lined up. Please stay tuned to NDTV Profit.